We are less than 20 minutes away from the official start of the trading day and a new week where trade progress seems to be getting investors once again inspired. A reminder, we were seeing record high trading for stocks in North America last week, in part because of perceived progress in trade. And it looks like, we were just talking about it before the break, the talks between Canada and the U.S. are back on track as Canada moved away from that digital services tax that infuriated U.S. President Donald Trump. But there's also indications that countries like India are keeping a trade team in Washington for longer than previously thought to iron out some differences, that China possibly making some progress in its conversations with the U.S. and even the EU as well. So how does this impact the mood of the markets? Again, since we're already at all-time highs, let's bring in one of our longtime guests, Allan Small. He's a senior investment advisor at Allan Small Financial Group. And Allan, it's great to have you back with us. And as I was mentioning, the markets, as we come to the end of the quarter, have been in a pretty good mood. What's been your take?
Yeah, everything is, I guess, been a lot more positive, right? You know, for a little while there, we had a lot of negatives to focus on. And since the ceasefire in the Middle East, now, I guess all the attention has now been put back on trade. It looks like, or at least it sounds like, we're moving somewhat forward or somewhat ahead with trade talks, Canada-U.S., U.S.-India, perhaps U.S.-Japan. A lot of potential for some trade deals. We're still not seeing inflation showing up in the data. Jobs are hanging in. We're going to have a big jobs number out of the U.S. on Thursday, which I think will be a crucial number, obviously Thursday, because of the July 4th holiday on Friday. Our jobs number won't come out, I believe, until the 11th, so the following Friday. We're going to get some manufacturing data, services data out of the U.S. So it's a big week, I think, for data out of the U.S. To give us an indication on how their economy is doing. And obviously, as we all know, as their economy goes, so goes ours. And if Canada-U.S. can count to some trade agreement in the next few weeks, I think the market could continue to move higher.
Yeah, and you're absolutely right. So we'll, over the next couple of weeks, get updates on the jobs picture in both Canada and the United States. And, you know, I do wonder, do you think part of the reason for optimism is for anyone who was concerned about a worst case scenario for the economy, you know, the recessionary concerns, that kind of stuff? Does that start to recede if you see some meaningful progress on trade? I believe some economists polled by Bloomberg were already projecting Canada's economy will fare a little bit better than previously thought, assuming some of these trade developments hold.
Absolutely. It's all about the trade agreements. And, you know, if we do see some trade deals coming through, obviously with our country, that would be, I think, a big boost, not only with respect to jobs but I think emotionally and psychologically, I think a lot of individual businesses are down right now, down because they're just having a very difficult time. You know, they ship a lot of what they make and produce to the U.S. If they're not doing it directly, then they're shipping to customers who deal in the U.S. So it's kind of hard to get around these tariffs on aluminum, steel, and pretty much everything else that's not USMCA compliant. So, yeah, absolutely. I think if we can see a trade deal done between Canada and the U.S., that will go a long way to keep us out of a recession. We are definitely seeing GDP numbers soft. Right now, we're hearing about job loss in many areas of our economy, and all that can get a lot better if Mr. Carney, Prime Minister Carney, can make a deal with the U.S.
And speaking of the U.S., as we come to the end of the quarter, it's been a solid one for stock market investors if you look at the headline numbers for the market. And technology, which had a couple of wobbly moments in 2025, really started to find investor enthusiasm again. You know, some of these usual suspects like NVIDIA, et cetera. How have you been approaching tech stocks these days, Allan?
Yeah, great question. And, you know, for a while there, a lot of individuals were trying to talk about the S&P 500 equal weight versus the Mag 7. And we clearly saw in the first quarter of this year, the Mag 7 outperformed by 3 times in terms of earnings per share growth versus the other 493 stocks. I think they went up by almost 28% versus the rest of the S&P, which went up by just over 9%. So you can clearly see that tech is driving the bus once again. And so what I've been doing for individual investors is really trying to pick at not only just the Mag 7, but big cap tech stocks in general, looking at names that still make sense, that are trading at good valuations. One name that comes to mind would be Alphabet or Google. 18 times forward earnings, one of the cheapest, if not the cheapest Mag 7 name. But you could look at other names like Amazon and even take a look at NVIDIA. NVIDIA has been on a tremendous run as of late, but many believe that this is just the tip of the iceberg, that there is a lot more room to run. I've seen numbers talking about NVIDIA stock getting up to, in that 180 to 200 range, today trading just around 150, just over. So I think there's a lot of room to run in the semis as well, not all semis. So I think you have to be a bit of a stock picker here. It's a stock picker's market. I think whenever markets get near or at all-time highs, that's when you kind of have to really do your homework to find some of these good growth names and the ones that are trading at reasonable valuations.